Hey guys, nice to see you again. Thank you so much for staying with us on Astro Awani. My name is Syed Fardino Omar, and of course you're watching your favorite property show in Realty. Now, every year in around this time of the year, we will be visiting the guys from Malaysia's favorite and Asia's #1 online property group, iProperty, to ask them what do they know about what Malaysians want and also people from around the region. So this year is no different, and we are here in the office for the first time. We are going to be talking to the head honcho of iProperty, and he's going to tell us what to look out for. So developers, so this is where you pick up and listen properly. Shaun DiGregorio. Shaun, thank you so much for having us in your office for the first time after so many years meeting you outside. Yeah.
You finally come in and stood in front of the sign. So
yes,
we're very pleased with that.
Yeah, so been there, done that, bought the t-shirt, I'm going to say. Okay. Yet again, you've come up with a survey. It's called the Asia Property Market Sentiment Survey of the first half of 2013. So what are your key findings? What do we need to know about this survey that you've done?
Well, this is the third time we've done this survey, so we're starting to get a bit of a pattern emerge, and I guess the interesting thing to come out of this one was that particularly in Malaysia, we're seeing consumers for the first time in our survey take a wait-and-see approach. Historically, when we've done these surveys, there's always been some activity, there's always been a lot of positivity, and that still comes through in this survey. But for the first time, we have seen Malaysians starting to take a bit of a wait-and-see approach, a little bit of uncertainty around some changes to the tax regime for property, some changes to the first homeowner scheme, and of course the election that's due very soon. So a little bit of caution starting to creep into the market.
Right. Now, when we speak to other realtors out there and other experts, they seem to think that, well, yes, the election is going to happen at some point, and Malaysians should not be bothered about when it happens or whether if it's going to affect the property game or not. But you're saying that Malaysians do care, and they are waiting and waiting to see what happens.
Well, I think you're right. I mean, we all know there's an election coming. That will happen. And whether the result is certain or uncertain, it still does create in people's minds a little bit of hesitation. And like a lot of investors, when you're investing, you want certainty. In property is no different. So the fact that there's an election does remove a little bit of that certainty, but people will just want the election done. It's certainly not the biggest driver of market sentiment. It's one of a number of things, but certainty is really important for investors. And the sooner the election, certainly from our perspective, comes and goes, and certainty is there for another number of years, then the better for the market.
Right, okay. Let's take a step back and look at the greater region, because of course this survey covers not only Malaysia but also Singapore, Indonesia and Hong Kong. What's the general temperature of pricing? Is it on a sharp escalation or are we on a plateau?
Well, look, certainly in markets like Singapore or Hong Kong, we've seen sharp appreciations in price, to the extent that, in Hong Kong, the government stepped into the market last year to slow things down. In Singapore, they stepped into the market late last year to slow things down. So both of those markets have been really hot. If you're a regular person like you or I in Hong Kong, incredibly difficult to afford a property now. Huge influx from mainland China. So the government are doing everything they can to try and dampen that demand, but also build. Similarly in Singapore, prices are off the dial, so the government's stepping in there. Indonesia's probably the exception where, relatively speaking, very, very affordable property, but more and more people starting to get into the market, so we're seeing price appreciation there as well.
And what about Malaysia?
Well, Malaysia's interesting. If we went back and did this survey last year, we saw a lot more activity at the lower end of the market, and that's continued. The market's really stabilised since our last survey. The top end of the market is still tough. Premium properties in good locations are still selling, but that whole top band of the market is still tough rather. Certainly from 300 to 500, lots of activity, and that's where most of the demand is. And we saw that come through in the survey in a fairly significant way. Right.
Now, if I'm looking at some of the average budgets cutting across all four countries here, you've got a huge spread where if in Hong Kong, the average is about $386,000 US. In Indonesia, it's only 20,000. So you've really got a huge market here from one end to the other, considering the countries.
Absolutely, and that's the intriguing thing about this region, isn't it? Where you've got centres where property is expensive as Hong Kong, and from 20,000 US, that's a deposit. In most other markets,
of course, yeah.
And in Indonesia you're getting a property. But remembering that in Indonesia there's 30 to 40 million people moving into the middle class and starting to see some appreciation in property. And the other factor to remember, of course, is that salaries are not rising as fast as property prices. So you're starting to get that affordability issue, which Malaysians have today, people in Hong Kong have today, and people in Singapore, Indonesia rather, are going to experience more so in the next few years.
Well, another thing that really piqued my interest here is looking at the property ownership, where in Malaysia, 41% of the correspondents that you surveyed own more than one property, as opposed to, and the numbers go down to 38% for those that own one and 23% for those who don't own any properties. And it's the reverse in Hong Kong and Indonesia. So can we read that as a trend of Malaysians liking to buy more than one property, perhaps for investment, or also to give to extended family members?
Yeah, certainly. I mean, in the case of Hong Kong, remember that 50% of the population are in government-provided housing, given the price of it. Obviously, in Malaysia, property price is a lot more affordable, relatively speaking, and Malaysians love investing in property. We see that with the percentage of people who own multiple properties. It's always been viewed as a dependable and safe investment for people. And with the growth in population of the Klang Valley, we saw a 7 to 8% increase in the population of the Klang Valley last year, and that's people moving in from rural areas. It's people like me arriving in the country, is driving demand for those investment properties. So it's always been a big thing for Malaysians, and it's a status thing as well. A lot of people own multiple properties, and it's own 2, 3 or 4. It's not unusual.
Interesting aspect of your research is, of course, the battle of the sexes of property. It says that men buy houses for long-term investment, 35% of them, and 32% of women buy houses for better environment for the family. So developers, which way should they go?
Well, look, I've always actually believed that developers should appeal to females when they're marketing their properties. I think in a lot of instances, and maybe my household's an exception, the wife or the female sort of half of the equation will often find properties, and it'll be left to the husband to make the rational decision, based on their return and the capital gain. But
based on affordability to begin with.
Correct, because he's got to go out and pay the mortgage. But quite often the emotional appeal of a property, its facilities, its environment, its setting for a family, is a really important thing for all parents, but particularly for kids. And then I guess dad is left with the task of paying off the mortgage for the next 20 years, so he's got to do the sums. But I always believe that developers should pitch it as you're selling the benefits, not necessarily the costs. So always pitch the benefits about development in my mind.
Right, but that does not mean that it should not still be looked upon as a viable form of investment. So for the guys, there's something in it for them as well.
Absolutely. A developer shouldn't think that if they can sell the emotional engagement to a property, they can double the price of it. It's still got to come back to a rational decision, which of course they'll make. But it's an interesting bit of data if you're marketing to an audience and trying to just pick up on that, I guess, something special that'll help demand of a development.
Right, okay. So moving forward, what do you think is the the top 3 things that you have learned from the research that both developers, investors, and all 3, developers, investors, and also potential house buyers should be looking out for?
Well, I think what we've seen in the last little while is increased government, let's call it intervention into the market. You've seen an increase in the capital gains tax. You've seen tightening of finance requirements with the cap,
mortgages,
70%, and you've also seen the government loosen up the qualification for first home buyers. So, we've seen 3 significant intrusions, if you like, into the market, which buyers, sellers, developers need to be aware of. So interestingly, the things like the capital gains tax increase and the cap on the qualification for finance, probably more of a psychological impact on the market than anything else. Certainly when you free up at a low end the ability to qualify for a first home buyer scheme, that'll probably have a real material effect on the market. So I think one of the things we learned out of this is, be prepared for government to intervene more and what that means for the market. I think that there is still value at the the $300,000 to $500,000 end for developers to be more active, because that's where the demand is. And I think at the higher end of the market, properties are still selling if they're good properties priced well, but it remains tough.
Right, okay. Final question. Seeing as to your research tells us that Malaysians have adapted the wait-and-see attitude towards approaching a new home or investment opportunity. Should they wait and see further beyond the elections and onto the next budget?
Well, look, the market will sort of look after itself in that sense, and I think Malaysians probably are less interested in the election and more interested in the impact of the capital gains tax changes, the changes to the first home buyer scheme, and they always take a little bit of time to filter through. But you know, Malaysians love property. There's a very active market, so we expect that'll be digested fairly easily, and you know, hopefully that uncertainty will dissipate and the market will get on and be nice and active in 2013.
Okay, Shaun, thank you so much for
My
that.
pleasure.
Well, we'll see you again next year, and
That's right.
we'll do coffee. We'll go out there. And,
Absolutely.
you know, if you want to find out more about what we've spoken about today, it's on the website, right?
We're released on the website, that's correct.
Yeah, it's on the website. Which website? It's your favorite website when you look for properties here in Malaysia, iProperty. And that's it from me in segment 1, second and third segment. You're with Lina Wati, and then stay with us on In Realty.